Hey everyone, how's it going? Welcome back to today's video on risk management. Today I want to go over the types of entries that I look for when it's in the impulsive phase of the market. So there are three types of entries that I usually look for, and I'll explain kind of my way of entering them. What I look for when I enter these kind of three trades, you can see I kind of name them three different type of entries. I'll go over them on a kind of an impulsive market that we see, and there's no right and wrong what you choose and what you do because they all have different kind of risk reward, different kind of entry criteria, etc. So let's dig into a few examples. I'm going to go over a few commodities, few currency, few crypto, and few equities to demonstrate that these kind of entries happen in different markets, and because it's all the same in price action analysis. So you might see these kind of entries or variation of it from maybe different ways of people trading. Um, Everyone trades differently, everyone has their own style, so it's important to have your own. So here I'm just going to explain my way of trading, and for sure that if you're looking into these and if you can find adapt of your way to do that, then certainly adapt it to your favor. So I want to talk about first entry here on silver. When we look at the price, when we are trying to enter the market, when it's not the next impulsive move, we always have to make sure that whatever corrective that it's forming, whether it's a continuation correction, which is in this case, or whether it's a reversal correction, it has to be showing you the sign that it's going to finish, that it's going to continue before we enter any of these kind of criteria that I'm mentioning. So in this example here in silver, you can see that there is a continuation correction here in making. We can see that continuation correction, and I'm outlining kind of the three different entries that I can capitalize on an impulsive move. So first entry is going to be what I call a reversal entry. A reversal entry is what I call a high risk, high reward. The reason why I call it that because there's no kind of more confirmation that the correction is finished. Remember, we always talk about that. We want to be in the next impulsive phase of the market. We want to enter when the price is impulsive. We don't want to be stuck in the consolidation phase. So what reversal entry is that we're looking at a correction. Let's say in this silver correction that we're looking at, we're pretty much going to enter before the price is breaking out of this correction, because that is going to be at the first possible entry, the first possible kind of a risk reward that you can put in, and you can get the maximized risk reward, because if those work out, if the correction is going to finish, you're going to get the next impulsive phrase and you're going to capitalize on this type of entry. But why is it high risk? Because, well, what if the correction doesn't finish? What if this move just continue correct itself and it corrects higher and you get tagged out for a loss before the price just resume? And that happens sometimes, right? And that's why these reversal entry that we talk about is going to be high risk, high reward. So what do we look for a reversal entry? Well, we talk about when we're looking at a correction, we want to have at least few swing highs and few swing lows. So in this example here, we do have a continuation correction with a few swing high, few swing low to classify as a correction. So as the price move up one more time correctively, this is important when we look at the lower time frame. How did the price get to the top of this structure here? Well, you can see that there is a potential double top here in the making, and then price is pretty much moving up there and then start forming this mini descending channel. If we drop down to the 15-minute, you're going to see that little mini correction here, and then this is where you would set an entry order, something like this, below this correction, below maybe the 1 hour or the 2 hour, one of the lower time frame candle closes, and you can set the stop loss above the high. And that's kind of how I would enter these kind of entries is let the price to you. All of these my entries that's going to be stop entry order. They're not going to be market order. They're going to be stop entry order. So just set the structure. Let's set the entry order below this correction that you're going to see on the lower time frame, and then let the price tag you in. And always the first kind of target would be the beginning of this correction for about 3%, and the next lows and so on. So that would be like first entry in these type of format, in these type of correction, what I call a reversal entry, because the price is need to reverse from the previous move up. So you're likely to see reversal when there's going to be one last lower time frame move up and then a reverse back the price. But what it is it's going to continue this correctional phase. So Let's look at another entry, what an entry called a breakout entry. So breakout entry happens when you understand that a correction is about to finish. So this correction here, when it's about to finish, you're setting a breakout entry order just below the correction, something like this. And again, stop loss above the high. Similar would be similar kind of stop loss like the reversal entry, and then you'll look for the lows of the correction as the first entry. So these type of entry, what I call breakout entry, is going to be low risk, low reward, because you're entering at the breakout. Usually, your stop loss is going to have to cover the entire correction that the price is forming, and usually that results to be a pretty big stop loss. But there's nothing wrong with these type of entries. You're going to have to capture some of the moves like that, because sometimes you're not always going to get all the entry available. You're Some of the times in this example, for example, in this example in silver, you get all three examples I'm going to show you, but some of the entries you might only get reversal entry, some might you only get breakout, or one of the two or two of the three, etc. And that's why you have to get familiar with these type of entries that you're able to capitalize the market. So silver breakout entry, we set the breakout entry just below the correction, so the entry order, stop entry order, just below the correction breakout, and then again stop loss above the high, and look for the first the lows of the correction as a first target, and then the next low, and so on. So that's going to be a breakout entry. Let's look at the third entry that I talk about, which is what I call a correction after breakout. This is probably my favorite entry setup that I look for in the market. So same example here. What we're looking for is after the price has break out of that continuation correction, is there a lower time frame continuation? Because we already understand the higher time frame bearish bias, we have that impulse, we have that correction, we know that this impulsive phase is likely to happen. So once the price breaks out of that correction, is there going to be continuation correction? And that's kind of how I look for, is if there's lower time frame, if there's lower time frame continuation, that's where I'm going to look for entry, and look for same kind of example as the first previous low of the correction as the first target, and then the next low, and so on. So these type of entry, correction after breakout, they're going to be medium risk, medium reward, because the medium risk is because what if this small correction ends up correcting a little bit deeper? You might get tagged out before you continue downwards, even though that bearish bias is still in your favor. Medium reward, because if you're comparing to a reversal entry, you're going to get a bigger reward from a reversal entry versus a correction after breakout entry. It's just how you enter these. But this is why trading is all about risk management. The way how I explain these three type of entries, well, reversal entry, high risk, high reward, breakout entry, low risk, low reward, and correction after breakout is going to be medium risk, medium reward, because they all give you different type of risk that it's involved and different kind of reward. But it's all about how and what type of management and entry that suits you as a trader, which one is going to be more on your favor side, which one kind of expectation. If you're always looking for more profit, well, maybe reversal entry is going to give you that most entry, but you understand that sometimes you might get tagged out of the entry before the price continue. So you understand you might take a few extra trade on the reversal entry before capitalizing the next move that happened, the next impulsive move. And whereas a breakout entry, well, it's suitable maybe for more people who are looking for not as much risk, because you understand you enter at a breakout and your stop loss is above the high. You have pretty wide stop loss for the price to move, but at the same time your reward isn't big because your risk is your stop loss is bigger. And correction after breakout is kind of in the middle. You're looking for a breakout from that correction, and then you're looking for this continuation correction to form, and medium reward, medium risk, because you're setting the stop loss above the correction, and maybe the correction may form a little bit deeper or even went all the way to the top before start dropping. That happens sometimes too, but that is the risk that we're willing to take if you're looking for these entries. So I'm going to go over a bunch of examples. I'm going to go over in different markets, different examples, and give you kind of an idea of how they are in different market and what kind of entry we can expect from them. So I'm going to go over a few equities first. Let's talk about Tesla as example. So Tesla as an equity, what kind of entry can we expect from these kind of bullish move? Remember, we talk about we're always looking for a correction after a impulse, right? So we want to look for an impulsive phrase first, followed by correction. And what kind of entry can we get here? Well, Is it possible for a reversal entry? Yeah, because we have this descending channel, we have a double top, we know that a correction is forming here. You can potentially set an entry order above the correction and then stop loss above the low and look for the next impulse up. And what is the second entry? Breakout entry, right? So breakout entry, we can set a breakout entry just above this correction, just above this larger correction here, and then stop loss above the low, and then looking for the next impulsive move up. And what is the entry I chose to do? Correction after breakout. Remember, we have that impulse, auto that continuation correction, and then a lower time frame continuation correction here. And this is when the price push up and continue up to the upside. So same idea here. If we move on to the next example here, after price had this impulsive move to the upside, what does it happen again? Another continuation correction, forming. Is there a possible reversal entry? Well, to me, I didn't see a reversal entry. I was waiting for a correction here, perhaps a descending channel, and then break out from here. That didn't happen, and that's why I mentioned not all the time when we see the next impulsive phrase, we're going to see all three entries. So what is the second entry? Well, breakout entry here, set the breakout entry order here, set the stop loss below the structure, and what is the entry that is the most favorable? Again, is that correction after breakout, impulse up, and looking for a continuation correction after we complete that continuation correction. So moving on to a few other equities, let's say Nike. Nike is a trade that is when we broke all-time high here. When we broke all-time high, what does the price do? Well, another continuation correction. We formed this correction here in the making, and then after this breakout, that is a lower time frame continuation breakout, continuation correction, and that is the entry we look for. Moving on to Boeing. Boeing, same idea is when we see these higher time frame correction, we see this impulse, we feel a correction. What do we look for? We look for a continuation, right? So was there a reversal entry? Well, the price moved down here correctively here on a lower time frame, and we know that there's a particular channel, descending channel here in the making. We have pretty much a double bottom. So yeah, reversal entry here, stop loss below, that's good. Another entry, breakout entry above the previous correction here, and then set the stop loss below. And then again, the better entry might be a correction after breakout. We break out here, price form a little bit of correction, we break out again, and then look for another continuation. And this is pretty much a flag, a channel correction. And in this kind of format, I would just look for a breakout entry. You're not likely to see a reversal. And sometimes when this next bullish push up is very powerful, very strong, you might miss the correction after breakout as well, which is kind of what happened in this case. So these are a few kind of equity examples. Let's jump into a few commodity examples. So currency examples. I want to look at dollar yen. Dollar yen was a pair that I keep talking about when we see that kind of a descending channel. So we see descending channel, which is a reversal. What we always talk about, what we look for is when the correction finishes, right? A lot of other examples just I show you are all continuation. What about when it's in the descending channel correction, right? Descending channel correction, same idea here, right? Descending channel, can we look for a reversal entry? Well, we have an impulse, correction, impulse, and then pretty much down to the bottom of here. Is it possible to look for a reversal here? There's another descending channel here. If you set the entry order here, below here, then that's going to be the first one to get in. And the second entry is going to be the breakout, right? The breakout entry here above this large correction, and then stop loss below the low. But here's the thing, when you look for a breakout entry in this kind of scenario, the stop loss is too big, right? You're running too big of a stop loss. You know your entry, your reward is going to be cut down quite a bit significantly. So what is the one that usually we look for? Correction after the breakout, right? We break out of this descending channel, we're looking for a correction here, and then looking for the next impulsive move to the upside. So that is dollar yen example. Let's look at euro kiwi as an example. Euro kiwi, again, this is a continuation correction, impulse, correction, impulse. So when we're looking for this next impulsive phrase in the market, was there opportunities here? So when we look at this higher time frame correction, well, there's a double top here. There's a tendency of a flag, kind of a channel correction in the making as well. And is there possible to look for entry? Just looking at the 4-hour or 2-hour, we set an entry order here below the correction, and then pretty much looking for that there was an impulse down followed by correction. So there at least some sort of lower time frame confluence here to look for an entry order here, stop loss above the high. And then if we zoom out here, Is it feasible to put a breakout entry now that the correction is so big? To me, not likely, right? There's a couple hundred pips here. It's not likely to be able to capitalize on this. And this is what I said in the beginning. These type of entries, sometimes we'll get all three of them. Sometimes you might only get two, sometimes only one, and rare chance you might get zero. But this is why we understand what type of entries that we can capitalize on, because if we don't end up capturing the first one, we can always capture the second one. So in this case, on Euro Kiwi, wasn't really any lower time frame correction. It's just pretty much impulse out of this correction, pretty powerful, and we just dropped down pretty impulsively here. Okay, so that's an example on Euro Kiwi. And last one I want to go over is kind of crypto example. So if I go to Ethereum here, if I zoom out here, kind of beginning of the Ethereum run here, we were looking at this as well when we have a continuation correction in the making, and then pretty much price impulse out, and then there is a continuation correction here. You can argue this is a correction on its own. You can find even reversal entry here as well, and there is that correction after breakout entry from the bottom here. So impulse correction, impulse out, another mini correction on its own, but this is an impulse and this is a correction after breakout. So you understand that multi-time frame analysis is going to help you to identify these entries in any time frame. But most importantly is that we understand when we're looking for these entries, make sure the higher time frame at the time, the higher time frame is bullish, right? So we're looking for bullish continuation on the higher time frame. That gives us confluence on the lower time frame. We're looking for these correction after breakout, because we know that these entries are medium risk, medium reward, and tighter stop loss, of course, when you're trying to capture the next impulsive phrase. And you want to have the higher time frame bias, the higher time frame overall direction behind your back. So when you're looking for these entries, it's going to give you a better probability. Okay, so let's recap what we talked about today. We talk about that there are kind of my three main kind of entries in a impulsive move in the market condition. So I kind of call them different entries. I call them reversal entries, breakout entries, and the correction after breakout. And I mentioned any of these three entries can happen in the move. So in this example in silver, it happens all three of them, but sometimes it might happen only twice or once or even none on a rare chance. And that's why I capitalize on them, making sure you get familiar on these entries is super important. They all have different risk reward, as I say, right? Reversal entry, high risk, high reward, because you're entering before a correction is potentially finished. It is sometimes going to work out, sometimes not, and you understand the risk involved, because you might take a one or two losses here before the next drop, and the next drop is obviously going to cover all your losses and then some. And breakout entry is more low risk, low reward, because you're setting pretty wide stop loss. You understand that this is kind of more as a swing trading kind of style, where your reward is generally not too big, but your risk is also generally capped and very safe as well. And the last entry, which is kind of my favorite one, is correction after breakout. I knew that the correction for a higher time frame is about to finish because it broke out, and then the confirmation is that lower time frame continuation here. That's going to give you medium risk, medium reward, but most of the time these entries are going to work out in your favor due to the higher probability set up from higher time frame to lower time frame, multi-time frame analysis, and the overall price action that it's showing. And remember, these are continuation correction I'm showing, and I also show a few examples of a reversal correction. And reversal correction, the entry orders are exactly the same, right? So making sure you're setting a stop loss entry order and stop loss above the high. That is going to always help you in the long run. Right, everyone? So this is kind of my way of breaking down my type of three entries in a price action analysis, specifically on the impulsive phase of the market condition when the correction finishes. Any question, comment, or feedback, please let me know below, and I will chat with you guys next time. All right, thank you very much.